Hello, everyone. This is Sergio Marrero, and we're here for another episode of RBL1 Live. We have our special guest today is Cheryl Campos, who holds a number of positions, but one of them is head of venture partnerships at Republic. She's an investment partner at the Community Fund. She's founder of VCFamilia. So she's going to talk about all of these, and she's a good friend. And so I'm excited to have you on. Thanks for joining us, Cheryl.
Thank you so much for having me. This is long overdue, and I'm glad we're doing it.
Yeah, glad we caught you. So to share a little bit about what I haven't covered for those that are watching, a little bit about Cheryl's background. So she graduated from Harvard University, has worked in finance previously at Barclays Investment Bank, had also been a venture fellow at the Yard Ventures before starting her explosive career in venture. And then also for those that check out Model VC on Twitter, that's and we're gonna chat a little bit more about that as well. So thank you, Cheryl, for joining us. First, if you can share with the audience, we'll start with Republic. So what is Republic?
Yes, great question. So Republic is essentially a platform where anyone around the world can invest in startups, and for startups to raise up to 5 million in capital from your customers, your fans, like everyone that believes in you from the ground floor, so that they're tied to your financial success, which I think is pretty awesome. So to date, we've helped over 250 companies raise over 150 million, and not bad for a startup of almost 5 years old. And so we actually also have amazing stats around diverse founders. So about 40% of our founders are women, and about 20% are Black Latinx. So overall, we're a curated platform focused on supporting all types of founders from across the US, and making sure that, this new asset class that was previously basically kept to just accredited investors can now benefit everyone that's interested in supporting early stage startups.
Amazing. And I've always been a fan of Republic, have followed you guys for quite a bit, and come visit when we were able to visit
pre-pandemic in our
pre-pandemic in New York. But you guys, we talk about crowdfunding. I think that the average consumer knows, you can crowdfund for a startup, so you can, invest 50, $100 and so on and so forth. But there's different types of crowdfunding that you all support. You talk about the, Regulation D and can you talk about the different areas of investment that Republic supports?
Yes, absolutely. So we're really trying to become that one-stop to raise capital using different regulations. So regulation crowdfunding is our bread and butter, and that essentially, allowed accredited and non-accredited investors to invest in startups up to 5 million, and that's kind of our flagship product. Then we also have Reg D, which is solely for accredited investors, but those are for kind of more allocation-driven companies that are just, have certain allocation. They just want to fill up fast. They already have all these accredited investors, and so they just kind of like pull those together. And then Reg A Plus is for accredited and non-accredited investors, but you can kind of think about it as like a mini IPO, where like it's a lot of legal and financial oversight, where you basically have to disclose a lot more about your company, but you can raise up to 75 million, which is very different from 5 million, right? And at the same time, you also want to include non-accredited investors in this deal. So that's kind of the appeal of Reg A Plus, is that you can do both non-accredited investors and also raise more money, but it does require a lot more legal and financial work on the back end. So we support all of these things. We also have Reg S, which is for international investors, which is a whole other thing. We're starting to go into that, but those are kind of the three main regulations.
Great. And, I saw previously one of that you guys raised token sale. Can you talk a little bit about that? What yes. is that? And what happened? I'll just turn it over to you.
Yeah, well, like that can be a whole hour if we want. But essentially, we created something called the Republic Note, and essentially it's a profit sharing token. So we essentially have bundled all of the shares and positions that we have in all of our portfolio companies. And so when there are profits or returns, to Republic, we then distribute those profits through the token. And so that, one, that's a very community-driven approach, which we all know that as technologies converge, community is everything. And so we want to make sure that, when we get rewarded, they get rewarded. And then at the same time, it was pretty, it was wonderful because we were able to raise about 16 million, not just from accredited folks, but also we're in process of making sure that non-accredited folks also are in this. And so that just kind of really helps the entire ecosystem be part of something that when you think token and crypto, it kind of has a little bit less of a, it's kind of more foreign to people. And I feel like people are a little bit more wary, but at the same time, when it has the Republic brand around it, when we're focused on making it as simple as possible, it's that type of awareness and education that I think really allowed people to understand the true value of this token.
And can you share more about is it Sierra network?
The Siri network, yeah.
Siri network. I was
not very intuitive how you say. I was like, you Sarah?
Yeah.
Yep. Yeah. Well, for that was really interesting. We actually raised about 22 million in 22 minutes, and it was crazy because Siri network has a really popular base. It's a traditional SaaS platform that works with blockchain companies, but they have a very passionate user base, and so we gained like 10,000 Twitter followers just because of people were so excited for the sale. And so we were able to do it on our platform, but that required, just given how they are huge out in Asia, we required a lot of product and engineering like on the back end to make sure that we were able to sustain the amount of growth and demand that was going to happen because of this. And so, we had a 50K wait list, like literally just to enter republic.co, like the site. It went extraordinarily well for a token sale. I feel like a lot of times there's a lot of scams or there's a lot of like things that go wrong with payments, and people could pay with big pay, but sometimes it doesn't work out. So we had a lot of stuff that we wanted to work through, but it went very, very smoothly and a true success. So that just helps everyone overall in terms of increasing our user base, our investor base, and overall just being the brand that is not afraid of trying new things, but rather innovate in the space.
Yeah, you guys are constantly experimenting on the other end.
We're constantly tired.
No, it's admirable, and we'll get into some of the I'll ask, since we're on topic. I think when we talk about ICOs and token sales, there was a lot of hype, and then SEC came in and said these are securities. They all went to zero. And I would say when I tell people, they're like, what is the token? I was like, it's like airline miles for an for startup. Like, but does the startup exist yet? Right? Like if you say airline miles for an airline that doesn't exist, there's a ton of risk in that, right? So what's your opinion of the token space? Is this a viable way to invest? What are your thoughts around that?
Yeah, so let me clarify that, when I first joined Republic, we were very crypto focused too. And I was like, I am not going to touch that with a 10-foot stick. Like, what is that? Right? Like I think that cynicism comes from like my mom and just like, and also like how I was raised, and always like, you don't see, you don't believe type of thing. So that's one thing. I actually didn't even care to learn about it at first, because I was just so focused on the mission and kind of how we were going to democratize the space. And that was so riveting to me. However, I did learn over time, just by being in the company and understanding how we approach things, is that we actually did token sales and ICOs in 2017, 2018, but we were the only ones really who did it compliantly through the SEC and making sure that these things wouldn't then, they wouldn't come down with us with a hammer, like, Ripple, for example, which was a huge deal, right? Because that's, the unicorn status. So I think whatever we do it very compliantly. And I think that's the name of the game. There are a lot of people right now doing very reckless things. And we have a compliance and legal team that we're currently expanding now because there's so much demand, and making sure that we're very thorough as to how we approach it. So once again, I've over time learned more about crypto, whether I liked it or not. But at the same time, I think, I trust what we're doing in a way that makes more sense.
Got it. If on that note, let's shift gears a little bit. I would love for you to share about your other endeavors, because there are several, but specifically VCFamilia. If you can share a little bit about what is VCFamilia, what inspired it, and what's the effort there.
Yeah, absolutely. So being in the space for a couple of years now, I think you, as well as I, have felt the pain of isolation, of feeling like, I feel like I'm the only one out here, right? Latina, and doing all these things. Like, anytime someone would ask me, like, so do you know other Latino VCs? I'm like, okay, Sergio. Oh my God, someone like literally like 4 or 5 other people. And it's like, that's it. Right. And I just felt like there were so many other people that we should connect with. And considering how even the election, right, showed that we are not supposed to be considered as a monolith. We have a lot of differences for sure, but I think we need to celebrate what brings us together. And so this was a very bottoms up approach of the community coming together and building VCFamilia, which essentially is a community of VCs who identify as Latinx and want to collaborate and bring more into the space, rather than being gatekeepers and just closing the door behind them. That's not the ethos of it. The ethos is really to get more Latinos in the space, co-invest with each other, get more GPs funded, and overall just celebrate what we're doing, right? The small, having a baby, getting married, getting engaged, like there's sharing Latino memes, and it's those types of things, when jokes and other things, where you kind of realize that there was a need for this and there was community market fit. And so I think it's those types of intangibles that has made it feel like there's actually a community for any Latino coming into the space, that they have a familia that's waiting for them. We've already had several wins, super exciting. We have now a couple of funds co-investing with each other. Scout was able to get into a really big deal, led by top tier VCs. We've gotten 2 people already into VC, so breaking in, which was super exciting. That's just through our Twitter alone. So for anyone watching, a Familia VC, if you just even want to look at VC jobs opportunities, we post them 3 to 5 a day. And yeah, I think it's those types of initiatives, those events that we have, the parrandas every month, to really get to know each other as people, as Latinos, and the future of VC. Awesome.
I know, definitely here, it's see the need for it, the different communities in venture and trying to diversify the space. So applaud you for I mean, you've been doing it too, man. You're out. Yeah, we've all been hustling. I will say it's funny. It's like I would say I've had my own shift, because so back when I first got into the space, started LTX VC, and we shared deals every week. That's what we would talk about. But we were just getting started, and then everybody. I would say not everybody, but I think there's a number of different groups that they all want to do their own thing. I'm like, hey, let's work together. They're like, no, I want to do my own thing. And I'm like, I think the Latino community, I have a love-hate relationship with that sense of individuality. It's okay, we can probably do more if we just together. Literally the motto together. Of VCFamilia is la unión hace la fuerza. Together we can, because why would you do things separately? If we together, we can do so much more, go farther, and grow. And the thing that
like even a founder I was just talking to yesterday, she told me about how when Latinx founder, she started her seed round and she got more support from the Black community than the Latinx community, just period, because they talked to each other, they were able to come in early, and then meanwhile we're out here slacking, and I'm like, well, okay, you know what, that's not going to happen, because VCFamilia, we're here now, we're going to support you, and like we don't want that experience to go and happen to someone else.
I love it. Unacceptable. I love it. And I think I would say our community doesn't always do a great job. There's always something. So applaud you for we just gotta keep that
for you ethos. For trailblazing. So
we just gotta keep building. We just gotta keep building for sure. But this is about you today. So so we're going to take a step back, actually, and Cheryl, if you can share your experience, right? It's like you majored in, economics, and with a focus on language, French and Portuguese. So and then you knew when you were leaving you wanted to be in venture capital, or what? Can you walk us through that story of saying, hey, I love languages and economics? How did you end up in venture? Can you share that with us?
Yeah, wow, a long journey for sure. I think so. Quite frankly, coming out of college, I was very focused on being the breadwinner for my family, right? My mom is, immunocompromised, and I needed to support her. And at the same time, my brother was going to be a doctor and going to be in debt for thousands of years. Hopefully a little less than that, but it's going to be a while, right? And so I chose economics as my major because I knew I wanted to go into banking. Because I knew that coming out of college with 6 figures right out, like, was going to be life-changing for me. Fun fact, I actually cried when I got my offer letter. And their HR was like, that is the most emotional thing I've seen. I literally was like, this is helping my family get out of poverty? Like, what do you mean? This is life-changing, And so at the same time, I wanted to do something for myself. And what I did was I studied abroad in Paris and Rio. So that's how I was able to get my Portuguese citation and my secondary in French. It was a way to also kind of, it ties in kind of nicely, quite frankly, with economics, because economics is kind of an applicable way and lens to see the world. And I also wanted to see the world myself, right? And so it worked out really well to feed my creative side while at the same time focused on this goal of making money, which I soon realized, both in banking and private debt and equity, that money does not fill you at the end of the day. What matters is purpose. What matters is that you leave a legacy behind based on what you're doing. Oof, sorry, helicopter.
They're coming anyway, for you, Cheryl.
So point is that I found my way through venture through actually another Latina mentor, Bianca Caban, who was who was actually at Republic. And so when I went to see her for an event, I saw what they were doing, and I asked for a job because I was like, this is the coolest thing I've seen, where whereas traditional finance preserves the present and the status quo, tech and fintech in particular molds the future and how you want to see it. So that to me meant everything, and if I could be part of that future, want to be a part of it. That's how I'm here. That's how I'm here, and then also Twitter.
Awesome.
Twitter has helped in terms of
yeah, and I mean, I like to also be real for people that are, we both know, right? When you're first getting into venture, in whatever capacity, a lot of it is like you're doing things, you're not making much money, right? You're doing things for, because you're just helping founders, you're trying to get them off the ground, or you're connecting them with investors, even syndicating the deals. You're not, what makes money is when you get a portion of those returns when they come back, which is usually a long time out. So, what are some of the, if you share what were some of the challenges in making that transition from banking into the venture space or startup space?
how much do I want to relive trauma? No, I'm kidding. I'm kidding. No, I mean, banking was crazy in terms of hours worked and the politics, um, the bad use of time, quite frankly. Like, you're literally waiting all day just for comments at midnight. It's like, well, I don't know what I was here for then. And yet to FaceTime and like really playing this game where you have to be a cog in the machine. And I was just so tired of being a cog in the machine. But what I did, what I saw this opportunity of being in venture, one, I mean, just having that passion to make a change was enormous for me, right? I think to like, because like I would wake up during banking and PE and be like, why am I doing this? I hate this. Why am I saving corporations hundreds of millions of dollars? And this is not going to feed me like in my soul, right? And so every day for Republic, I was like gun ho. I was like, I'll work 80 to 100 hours and apply this banking ethic work ethic that I have, and just apply it here. And if, you know, that, I think that will help me just get far because I'm like so passionate about it. I have the work ethic to do it. And at the same time, it was interesting and new, right? Just learning all these terms, learning how the dynamics work. I faced a lot of criticism when, you know, I would go to like VC events and they'd be like, oh, you're not VC, you're crowdfunding, like go away, blah, blah. And I was like, well, first of all, rude. Second of all, you don't know what you're talking about just yet, but you're going to see. And now some of those same people are the ones coming back to me being like, how do we partner? I love you guys. I'm long in crowdfunding. And I'm like, okay. And I think it's that type of kind of really having that belief of the mission, the belief that you can, that this is going to be something monumental that I think overall just drove me. Plus we have an amazing community. We have our venture partners. We have now fellows and associates who are going to be the future of VC, and everyone's diverse. Everyone's like just good people doing good things. And that's been very, it's something that where in banking, it's very different, right? You're kind of like on your own, doing your thing and, you know, being at the competition, getting that top tier bonus. And here it's much more collaborative. And I think that, you know, obviously there's some competition, you know, around number of spots and getting promoted, like all those things. I'm sure like, you know, getting allocations, all of that. But when it comes to like, you know, supporting founders and making sure that they're getting funded, like there's a good people doing good things. So yeah, that's what I think.
Amazing. I think there's so much that can be done in the space on that topic, like taking a step back on, you know,
we're taking all the steps.
I mean, yeah, thinking about, you know, like, you know, like doubling down and trying to figure out, you know, what you all are doing, right? You talk about how, okay, our bread and butter is XYZ, but we're experimenting in these areas. I do think crowdfunding is, you know, changing, you know, the landscape of early stage venture. You used to be able to just I mean, even crowdfunding $1 million, now it's 5 million. You know, like how do you see crowdfunding shifting the early stage venture space?
Yeah, there are several trends that have come together, quite frankly, accelerated because of COVID, right? Which has been a curse, but also a blessing in society. And so a couple of things. One is there's an emphasis on community, right? Community is everything. And founders should make sure to cultivate that community as they grow and from day one. Second is ownership. People want to not just be consumers, but actually want to be part of the success and journey of the startup that they're, you know, giving their money to. Three is diversification. I feel like a lot of people don't want to ride out this whole kangaroo market and, you know, are trying to find returns in different ways. And then last but not least is alternative assets, right? You know, having a piece of a startup is definitely an alternative asset. And so people, as the rise of NFTs and crypto and investing in art and music and all of this has grown, people have realized that they were excluded from, you know, investing in startups until, you know, recently. And so they can do it through us. Plus, what obviously helped were the SEC regulations changing, which we have lobbied for years, and you know, just making sure that people are aware this is an option for them, I think is interesting. And we've had several startups like Gumroad, for example, that raised 5 million in 12 hours from their community, which was incredible. We had Arlen, who actually didn't raise for her fund, but raised for her operating company. And that also got 5 million. She like, it's just been incredible.
Yeah. Sorry. I want you to, can you share a little bit about, we were chatting before, what is the difference, right? Like your like now you're crowdfunding for your startup, which makes sense. You know, money comes in, you sell a piece of equity and you run your business. And then when there's an exit, you know, they benefit. Like when funds are now crowdfunding for their operating company, what is that, you know, what does that, what does that mean? What does that look like?
Well, so Arlen's was the first, and it was innovative, and that you know took a while to actually get the structure straight and work with her team and to make sure that, you know, this was a success. And so the way that she did it was essentially, you know, this operating company would be able to disperse like 2% management fees and then 10% of the carry, both historically and future. Which is amazing because it's basically an evergreen fund that based off of how much she raises in the future, she'll be able to give returns to her community, which I think is a really smart play, and one where we're seeing much more demand for this type of product. It is what this does is it helps leveling the playing field, especially for funds that, you know, one, have a community already, and so that's why they're you know, raising these, you know, operating companies for these funds. But then two, like you know, everyone gets to even learn more about VC just by investing in an operating company, right? They're like, wait, how does this work? What are you doing? And it's that awareness that I don't think that a lot of people have around this, but is definitely an option. So going back to your prior question around, you know, how is this changing early stage money? I mean, at some point, we were creating the infrastructure for anything, you know, any early stage company that wants to fundraise, right? Whether it's in real estate, in video games, in crypto, and Main Street, we have confidentially, we have more stuff coming. So like, you know, like it's these types of things where we are going to service whoever is a great investment that wants to raise with us. Right now, we're a curated platform. But not only that, but at some point, the tide will turn where VCs will try to get allocations to the deals, and their founders will be like, no, like we want to raise first from our fans, our customers. We want to give them the best terms, and then we'll go ahead and then we'll fill out the rest through VC, which I think there's power in the crowd. There's power in getting that marketing out there early. There's power in like tapping into that user base that, you know, wants to say, hey, I actually am a retired lawyer, you know, use me for services. Or like, hey, my brother has a couple of NFL stadiums under his watch, use this. Yeah, I'll connect you so that they could use your product. You know, it's that type of network effects that you can really tap into as a founder. And so there will be times where like, we just had one actually, if you go and like Weston Gage's startup is called Maven, and they raised from first round because they're already like serial entrepreneurs. They raised from first round, but then actually allocated part of their cap table to diverse investors, which I thought was so cool. So not only the diverse investors, but, you know, potential customers now of the brand. And so we'll see more and more diversity, both on the founder side of things, more on the fund side of things, and then more on the, you know, on those on the cap table, which I think is going to be really exciting in the future that we do want to see.
And what's the caution for the space? Like a lot of great things happening, a lot of access being created, like the focus on diversity, but on the other side, like the speed and distribution of capital is getting shorter because there's more people putting in their money. Sometimes they're not being as diligent, like the valuations, early stage valuations, well, even public evaluations now are becoming inflated. What's the responsibility we all have now as we're building this, walking into this future? What's your
great question. Because not everything is roses. I love Republic, but you know, I think if anything, we've always been diligent around having responsibility to our investor base to give them the best terms and also something that's fair. Like if a company is already raising from the, you know, traditional investors, like why would there be different terms for retail investors? Like that shouldn't be the case. And so we would make sure that, you know, if there's ever some discrepancy, it's because, you know, the actual business in itself if it grew or like something like that. And so we actually work with every single company to make sure that they have the appropriate terms and make sense for the business that we can defend and figure out like how, but some other platforms don't, and quite frankly, it's a reflection of what's happening in the VC space, right? Like everything is going up. And so it really is a tension between us, reflecting what's happening in the traditional VC space, but then also being true to our retail investors and making sure that we protect them. Because if we think of like, a single mom in Ohio who's trying to like put in some money and, they're getting, really bad terms, like that's not fair to them. And so that to me is one of the big things that I see we have to be changing with the times, and a lot of that is moving into like more the seed Series A space, which we see happening now since more companies want to raise the 5 million. They want to engage the community. But that also means another thing, which is that pre-seed companies, that there's always been a gap in terms of supporting them. We want to make sure that we continue to have a selection and diversity of different startups on our platform. So that's another tension that we currently have, which is like, do we go upstream and continue to build out, all these amazing companies, but at the same time, making sure that we support pre-seed companies, and also like a lot of pre-seed companies are led by underrepresented folks, right? And they generally like, because they don't have the access to funds, they might not make it to seed or Series A. And so like making sure that we are intentional with diversity, making sure that we're intentional with getting pre-seed companies, and also having this diversity across the board, which right now people are like they're throwing money in different places, like you mentioned, but really be intentional about that spread that then we can give to our investor base.
Awesome. I know we're just about time. I wanted to thank you for sharing your insight on the space. So again, for everyone that's tuned in, this is Cheryl Campos, who is head of partnerships at the Republic, founder of VCFamilia, investor and friend. Thank you for joining us tonight. So thank you, Cheryl.
Thank you. Appreciate it. Have a wonderful day, guys.